trying to catch trades like this is the video for you. Trading is only simple if you make it simple. So this is the blueprint that I use, and let's keep it very simple. One asset, 3 time frames you're looking for. S&P 500, that's what I've selected, and the 3 time frames: 4 hour for bias, 5 minute for narrowing down entry, 1 minute for entry model. Then let's go ahead and start with our ABCs of trading. A, we're assuming control, right? What is our bias? Where are the swing points? What are we sweeping? That's the biggest question we have to ask ourselves. These are the starting questions. Now we have to go through this checklist: bias, bullish, bearish, what's the swing high, swing low. We have to figure all of that out, and then we can figure out what's going to be swept. That's going to help us figure out the direction of the market and help us start narrowing down where we're going to take our trades. So I went ahead and marked out the swing points. I like to set alarms around the swing points. That's just to help me not stay so much time on the charts, because that can be very, very overwhelming and time consuming. So I suggest you just put alarms. That's what I do. So once, let's say that alarm hit, I'm like, okay, it created a new swing high, right? That's what we're doing. We're figuring out our bias. That's ultimately what you're doing. It's very simple stuff. I let my alarms kind of just do the work for me, right? I highly suggest you utilize that. That is a, beautiful tool to have, and it's there on TradingView. You might as well use it. So once you figure out what's the bias in terms of it's bullish, so in this case it's bullish, so in the back of your head you're already thinking, I'm going to be looking for long positions. So now that my swing high and low has been identified, that's clear as day right here, right? Now we're thinking, okay, what are we sweeping? Well, now it's going to start pulling back, so it's sweeping all those lows on the left side there. So when that all starts happening, now we can start moving into our next phase, which is B. Behind a bias is liquidity. Liquidity is being swept. That's the whole idea of it, right? So we have to figure out what's internal structure, what's the mirror of the higher time frame. It's always going to be doing the same thing. What we are looking for in the mid time frame, lower time frame, higher time frame is the exact same thing. So I'm just kind of showing you guys, how you mark out on the higher time frame and where we're at on the mid time frame. So with that being said, I'm now going to ask myself, all right, the mid time frame is where we're narrowing down our entry. So I'm going to go ahead and hop onto 5 minute like how I did. And now I'm going to start marking out, okay, where did it break structure? What was swept? So at this point in time, it broke structure to the downside. I'm looking for a long position. So what am I looking for? I'm looking for the market to break structure. So with this, I'm going to, like I said, look for that mirror of the higher time frame. I'm looking for long positions. So I want it to break structure to the upside. Now this is where we start going into the sequence of testing your supply and demands, what's being swept, finding order flow, what's the sign of respect. We want to look for all that. So we want to look for something similar to that on this time frame, right? Before we start, let's say, finding an entry. We're just trying to narrow that down as of right now. So I'm just marking it out, waiting for the market to kind of show me what it wants to do. You have to let it just play out. Don't go above and beyond and trying to just force an entry. Don't do that. It never works out. So now we're doing that. Now I'm hopping into the entry time frame. Now that I'm in the entry time frame, now I can start looking for the test of the supply and demands, right? That's ultimately what you're doing. So meaning order flow. If you don't know what order flow is, that's where, let's say, a supply, you have a consistent respect of supply. Or if it's a demand, whoever's in control, you have a consistent respect of that demand. The question you got to ask yourself, who's in control? So right now we're just testing it out. We're just playing with our hypothesis, right? We're just trying to see what's happening, how we're gonna, play from this. So we're just letting the market kind of show us its cards, if that makes sense. All right, looks like that demand worked out. So maybe we can start looking for something off of this, right? Now that we have the first demand that was respected, we can then start trying to figure out, all right, where is our entry model going to be at? We now can start looking for a demand that we can enter off of, but we have to make sure that it shows that it's in control. The only way to finally confirm that is when you have a supply. So in this case, we're looking for long positions, right? So we want to take a buying opportunity off of a demand. So we're going to look for a supply to have a reaction in the market and show us that, okay, supply is there, but it's showing a reaction and it's getting swept afterwards. So kind of similar to this, right? So, okay, so reacted to it, it's reacting to it constantly. That's beautiful. We want to see that. Now, it's not breaking below that previous demand, right? We don't have that, but okay, it shows that supply is in control at that short period, but then we have that bullish move. That's where you start to see a difference in the market here. So we had that reaction previously. We're just going to go ahead and mark this out just because I think it's very important that you guys see what I see, right? So with that being said, we have multiple supplies. They all are respected and are having a reaction, right? But we're entering off the second or third, order flow. So in this case, the second or third demand, right? Because as of right now, supply, it has a little bit of reaction, but look at that. It reacts to it again. It pauses, then it blows through it, reacts to it, sweeps to it, right? We want to see that. When you have that step-by-step process that shows you that, okay, the supply is there, it is valid, but that's not who's in control, right? The actual one that's in control at this given point in time is demand. So with that being said, I then look at it as like, okay, I can go ahead and take an entry off of this demand after that pause and reaction, right? That's where you're going to find the demand. So I'm going to go ahead and just mark that out. I'm just, removing the drawing so it's a little bit less clutter. I know that can sometimes be an eyesore. So I like to go ahead and just mark up that demand, and I'm going to go ahead and just take an entry off of that. Why do I think that demand is, accurate? It's okay to take a trade off of it. Well, the first demand was respected. This demand is playing off of a supply that had a reaction and was swept. So I'm comfortable taking that trade. I'm comfortable taking this trade just because we have multiple things that have proven that, okay, this is the highest probability. And that's what trading really is. You're looking for the highest probability. Now let's refer to our checklist and look. Tested the supply and demand. We found our sweep. Then we found our order flow, who's in control, and then we entered off of the second demand, right? So that leads us into C, control your risk. So this is just a quick rundown of how you can possibly break down your risk management. I mean, obviously this is going to change, depend on what trading style you have and what kind of risk management you have, the capital you have, and obviously what are your trading tendencies and what session you may trade, how many opportunities you're going to have. So there's a lot of variables on that, which we do go over it in our Discord a lot, so if you ever need a little bit more help on that, you think that's the missing piece, don't be afraid to speak up. At Discord, it's free. You can join it at any time. So with that, I look at it, me personally, I like to aim for 1 to 5s. That just fits how I trade in terms of the duration of trades, frequency, and my strategy success rate. 1 to 5s work best for me. So this is the trade. It didn't last too long. It was pretty easy, simple. Like I said, guys, if you have any questions, you're more than welcome to reach out to me and Solo, my counterpart. And as always, stay profitable.